Good morning, guys. This is Alejandro Zambrano broadcasting live from ATFX offices in London. We're going to take a look at the markets. You should be able to see, we'll see my face right now. And in the next few minutes, you should be able to see my screen. Do let me know in the chat box if you can hear me and see me. Should be all good. I have a good amount of people here today. I'm really happy about that. We have Angela, we have Benjamin, Mr. Don Holm, Ivan, Joanne, Keith Jones, Marvin, Nikos, Rich Bell, Taufik, and this is a difficult one for me, but Tip Vipa, I assume. Sorry if I pronounced that wrong. And Vincenzo. Good. Hello, Sis Nikos. I hope you're doing well. I hope you can see me. Let's kick off. We're going to begin by showing you my charts as we usually do. And as you know, I need to also mention that trading financial markets is unfortunately high risk. I know most of you guys have heard this 1,000 times, but there might be some here that are new to the markets. So it's really important to understand that it is possible to actually lose all of our invested money. In fact, about 70 to 80% of people that trade share CFDs or CFDs in general, like Forex, actually lose money trading. But that's, of course, what we hear, and we want to try to avoid that. Buenos días, says Angela. Bueno, buenos días para ti también. So I speak 3 languages, Spanish, Swedish, and English. So you caught me there. That's good. All right, let's begin. And I'm switching off my webcam now. You should only be able to see my screen now. And we're going to begin with the New Zealand dollar versus the USD. This is a market I actually covered in an article on ATFX. If you just go to ATFX, you will find it there under analysis. And it's an ascending triangle in the New Zealand dollar versus the USD. What I try to do when I trade the markets is I let you look across this whole list of different markets to try to figure out which are the best markets to trade, the best patterns from a technical point of view. And here, this ascending triangle, it suggests that if we trade above 69.40, that the market may potentially go upwards. That's what the pattern is suggesting to us. And this break here could potentially lead to a rally of 241 pip. And that pattern objective is derived by looking at the midpoint of the pattern. The pattern itself is constructed by doing this horizontal resistance level. You got 1, 2, about 3 touch points at the same level. And then you have the difference here, which is provides you with that pattern. Now, the way I like to look at this is that if we take out the level, then I'll turn bullish. Until that happens, I'm not bullish. And then what I'm looking for is potentially having a stop just below the daily low of the candle. That's what I would look to do. Let me just see here. I need to like that. So let me just switch something off here actually. About to switch off the wrong software, but that's fine. Cool. Break here, turns things bullish. As for the euro versus the USD, it's been a very, very boring time for a very long time here. The market, in essence, is trading sideways here. And take out the upside, turn things bullish. We trade below the yearly low at 1177. Things turn bearish. Until that happens, we're pretty much trading sideways here. My guess is as good as anyone's. You can probably just flip a coin, and that's going to tell you what's going to happen over the next few days. Obviously, in the long run, you know, we're seeing bad data out of the Eurozone, and at the same time, the US is holding up relatively okay for now. So maybe we'll trade lower. I mean, it's more likely that the Federal Reserve is going to increase interest rates than the Eurozone, and the ECB is going to increase interest rates. So this still has this longer term bearish bias, but in the short term, again, just about anything can happen. In the short term, in the GBP versus the USD, the GBP is holding up relatively well. Why it is so, I'm not really sure. It's quite difficult to sort of know exactly what to do and not do when trading this market right now. But I do know that it has a bit of a bullish bias above last week's low at 129.52. In fact, we talked about potentially buying here for this heading upwards. That's something you can do. But guys, you should be very, very careful. Friday is Brexit day. If there's nothing in place, we might have a hard Brexit by the time of the day. So maybe GBP USD is going to be trading down at 127, maybe 125. But then over the weekend, there's some sort of a deal, and Monday morning they say, well, we're supposed to have Brexit, right? Well, over the weekend we negotiated a deal. So even though we're actually in Brexit right now, or the UK left, we agreed to continue as before. So business as usual. It could easily be something like that. And then the market opens and we're trading up here somewhere. So would not hold positions over the weekend in GBP USD. As for the dollar yen, it's moving up a bit. So as you might remember, the market turned bullish down here, and I was bullish, started to get bullish from here because the initial period here I was bearish. But from here, the market moved upwards, and this was good. And then the last trade idea was to buy here. Stop loss was just beneath the low. So we got stopped out here, or the trade idea got stopped out at the end for a tiny loss. And since then, the market just turned bearish. Now we're moving upwards today, and I did a little video about yesterday about the weakness across the board in different markets. And this is a market that continues to be bearish. Of course, it's too early to know now if we're going to have substantial losses going forward or if it was just a one-day event. But for here, I'm continuing to be bearish, and I will be continuing to be bearish as long as trade below 111.01. If that level is taken out, then looking at it from, say, a bigger picture like a weekly chart, it will be quite clear at that point that dollar yen is consolidating further. And then, in essence, I will just turn neutral at that point. Gold prices are going upwards, not necessarily today, but in general going upwards. As you know, over the last few days, I mean, we're bullish on the way up. That was quite easy peasy trading, not that difficult. And then we said that I was bullish up until here. I think it was here. The market turned bearish here. And from that point onwards, I turned bearish. Now, the idea was to sell up here. The market pushed lower from this level and then went all the way up again and all the way down and all the way up. The trend defining level is 113.28. Now, here it was perfectly fine to short the first time. The reaction was good as well. The market did go down lower, but now we're pretty much back up at the same levels again. By the way, these levels are derived using Fibonacci from the high to the low. So these are three different levels here. Now, the market reacted good the first time around, but as you can see here, the market moved back up into the sell zone two times, and since then it's pretty much stuck in the sell zone. And the problem here is that it's not reacting the way it should be. If it was a genuine bearish market, we would have just gone down like this, maybe gone up a little bit, and be trading down here. But clearly, this is not a genuine bearish market, and there's a high risk that we touch the trend defining level. Usually, when the market is very close to your stop level, it will usually visit your stop level, at least when my analysis. So here, there's two plans of actions here now. If one is already short and committed, we just stick with the plan until proven otherwise and stopped out. And if we want to get involved, I think the best idea is just to short sell on a break to 12.97. The only time I'm going to start to turn bullish and consider bullish opportunities is, at least right now, would be on a break to 13.28, which is this level up here. Crude oil prices. So there's a lot of things going on here. Firstly, you have that big head and shoulders pattern. So this is a 6-hour chart. You have that daily low, low here in December. You got your left shoulder and then your right shoulder. You had the break here. That is still giving us a target of 68.72, which is up here. And then you have horizontal support and resistance trading sideways like that. And this is a rectangle. The break happened here. We almost moved up to that target. The difference between the low point and the high point was $2.96. The difference between the break here and here is $2.96. That's how we derive that target. We almost touched that target, but then we moved back to the breakout point, which is fine. What I have done as the market bottomed out here is that I have taken the trend defining level and just put it slightly here. Initially it was down here, it's now here. So if you did buy already on March 13, then that position is pretty much a break even now. And if you bought on the dip, you have a significantly lower stop or risk. This market could easily go down. And if it goes down, as long as you're above 57 65, there's no reason to make any changes. But if it takes out support here, probably the people that have bought here and here and here, they're gonna get in panic and they're gonna close out their positions, and this market is gonna tumble down to something like 56. You see a bit of a dramatic move here. That's most likely there's a ton of people having stop loss orders just below here. So I'm happy to be bullish. I think if it goes down, people will probably buy. This is 58, 56. So I definitely think people are going to buy here. If we revisit the levels, then they're going to target this high. And then who knows? Maybe we'll go all the way to the head and shoulders target at 68.72. But I think that's unlikely. I think it's probably a better idea to just target something like 63, 69. S&P 500, significant decline here a few days ago. This is just your daily chart. Significant decline. You see the price traded, took out 1, 2, 3, 4, 5, 6 days of actions for a whole week. Really took out all of that action. Traded substantially lower, and it's now sort of managed to move up again. If we take out 2780, it's not necessarily caused the market to tumble. We're probably just going to go down something like 2744 or something like that, and that's it really, I think. But it could be the beginning of something. And if you look here at the German DAX had a strong sell-off already on the 22nd and on the 20th. So here this market is already bearish. So when you just need to be picky, if you think about it, if the S&P turns bearish, what's going to happen with the if the S&P turns bearish, what's going to happen with the DAX? The DAX is going to decline much, much more. So the S&P is the market you want to be buying if you're bullish, whereas if you're selling or you happen to be bearish, then the German DAX is the market you want to sell. You always want to sell one of the weakest and buy one of the strongest. And I think that's pretty much it. We covered most of the markets now. If you have any questions, just let me know. You can always just use the little chat box there to for any questions you may have. So this is a new little office. Well, not a new little office. It's one corner here at the ATFX offices here in London. If you're ever around, just let me know. We can grab a coffee. I can show you around. ATFX itself, it's a company, and we launched properly less than a year ago. And the global CEO of ATFX is a former FXCM guy. He used to work for FXCM for many years, based out of Hong Kong, and then he works for ADSS. And he's a real veteran. Set up the business here, and what they do really good compared with many other brokers is the actual product. So if you look here, there's two different type of accounts: Retail Standard and Retail Edge. And Retail Edge gives you access to some very, very tight spreads, and not only on the majors but on all the other exotics. I know for a fact that if you compare say GBP pricing against CMC and IG and FXCM, many times the pricing in GBP USD is going to be the lowest with ATFX. The same is for other pairs like GBP Yen and other GBP pairs. And then you have all the other markets here. Now, what is interesting is this: most brokers are going to give you tight spreads on the majors, right? This is what most people know and trade. But people will also trade all these minor pairs like Aussie dollar yen, CAD Swissy. And if you compare this list, all the more sort of Forex minors, you'll see that many other brokers are going to charge you like 2 pip spread, 2.6. It's just because they know you don't trade that too often. But when you add everything up, maybe 20 or 30% of your trades are going into these more exotic pairs, and then it actually matters quite a lot. Not only that, they have some tight spreads on the even more exotic pairs like Euro Polish Zloty, dollar Hungarian forint. Everything is relatively tight. You have the metals as well. So the product itself is very, very straightforward, and this is something you can access via MT4 web, MT4 mobile, and the normal MT4 platform. They're supposed to get MT5 soon as well. Not that it actually matters too much, but the MT5 is supposed to be launched. So if you have any questions about ATFX or anything of the product, you're most welcome to ask me. As well, if you have any questions about the markets, just put them in the chat box here, and I'll do my best to try to answer them. ATFX is also regulated by the FCA. They're regulated in SISEC. They're also regulated offshore. Got some cryptos as well and single share stocks. You can trade your Apple, Amazon, American Express, Boeing. You trade all those shares here with ATFX. Okay, I think we're going to wrap things up. I don't have any questions. Guys, I want to thank you so much for joining me this morning. Also want to thank you so much for everybody that likes and retweets my comments. If you like this presentation, don't forget to attend. And of course, don't forget to like. Don't forget to make that digital footprint as big as possible. Why? Well, because, I'm a momentum guy. I like to go with things that actually work and trend upwards. And if I see that more and more people like this presentation, they come and join me, of course we want to do more of them. Whereas if people don't show up or there's no interest, then we do less of them. So if you like it, then please don't forget to share. Okay, if you have any questions, just let me know. In the little chat, you'll see my email, which is alejandro.zambrano@atfx.com. Thanks so much for watching, and I'll see you guys tomorrow, same time here at atfx.com. Thank you.